All right, good morning. Welcome everybody. Thanks for tuning in on Tuesday. I feel like Wednesday today for a second this morning. I looked over at the calendar and it's like, oh, it's only Tuesday. Slow week, I guess. But to anybody that's watching on the replay, thank you. If you want to join us live, we go on Monday to Friday, about 8 o'clock. About a minute late this morning, running around, but 8 o'clock Pacific Standard Time would be great to have you join on. But as always, the replay is always on, so I encourage you to watch it. There's always some good comments that get pulled up from everybody that is visiting, and we talk about investing. We talk about TFSAs. We talk about what's happening out in the world. Topics. Basically anything to do with investing, it will typically come up, and then we usually sometimes get sidetracked on other things. So we'll start off and say, as people roll in, that's always takes a few minutes for the YouTube to push things out. I'll have a sip of coffee and then we'll welcome everybody that's here. So don't be afraid to say hi. We have the regulars that are here, and it's always a good group of people to see who's popped in. That coffee's good this morning. Abigail, welcome. Always good to have you. Welcome. And Stan's here. Hey Stan, welcome back. And Rod, top of the morning. Hope you're having a good Tuesday so far. And MC, you made it early. Welcome MC. We still don't know what the MC stands for, but we're still going with Mountains of Cash. Mountains of Cash. And hi. Welcome, Nadia. Nice to have you back. That's great. Just a quick update on the channel. I've been swamped with work, and I haven't been had a chance to get into film that portfolio update. Unfortunately, I still have that coming. I'm like a broken record, and I will have the TFSA update done shortly, and I will have my dividends for November. I still haven't done that video either. I'm slacking on the channel, but work has been, it's weird. It's December and I think everybody's in a rush or something. I don't know what it is. I'm almost at that. I don't know how everybody else feels in December. Like it kind of hits that second week of December and you're kind of getting into holiday mode already. And you just wish everybody would be in the same mood and you can just kind of wind down with work. But it is what it is. It helps me. If it's busy, it helps with investing. So that always works. I guess it's both sides of the coin there. But sometimes you wish it would just quiet down so you can get the fun things done, like the portfolio updates. But so I will get that. We'll get that finished and moving forward. So thanks everybody for joining. Always appreciate it. I've got a few articles to share today. I always try and pick good news, but there seems to be not a lot of great news out there right now. As you know, watching the market yesterday, we were down. A few things were in the green. I'm looking at my portfolio, but like in general, I think kind of down, and we're seeing it again today, which is kind of unfortunate. I don't know if we're going to get that. Are we going to get that Santarelli? Is this a little decline before that happens? I don't know. I think there's just a lot happening with. Obviously, Bank of Canada doesn't have as much effect as what's going to happen with the Fed the week after. But Bank of Canada again tomorrow, interest rate announcement. So we'll know that going into the live stream. They have, I believe, it comes out at 7 a.m. Pacific. So we'll be able to jump on and talk about that once with the live stream tomorrow. So that'll be good. And we'll have maybe a bit more clarity about what's going forward. And then of course with the Fed next week. I think the market's just pricing everything. Must be just pricing everything in what's going to happen. So we'll have hopefully some more kind of path of clarity going forward. Hopefully, I'm hopeful. Brian, welcome. Always good to have you. Thanks everybody. So let's jump in, and this is it. The last will be key. So I think the inflation data comes out. I could be wrong, MC. Is it Monday? I'd have to double check in the States when the CPI comes out. But yeah, that will be key. That's what everybody's, I think, kind of waiting on what's happening. That'll give us a lot of, I think, hopefully a bit of kind of what's going to be happening in the new year. And that's, I think, what everybody's kind of waiting on. We'll see what happens. The meeting is next week. So we'll be able to talk about that, which is always good. As always, if anybody has any questions, just have to fire them into the chat. Or if you're new and lurking and watching, then don't be afraid to at least say hi on the chat. It's a group of people here. No questions or silly questions. I'll do my best to answer them. if someone asks a question, but there's a lot of times people in the chat will jump in even sometimes before I'm able to answer, or if I don't know the answer, they will jump in and help you out. So we're good. It's a good group of investors here, and there we go. So let's just pull up some news. I guess I've got kind of one good article. So I mean, yeah. So let's not be all doom and gloom today by any means. But we'll start off with the bad. We'll start off with the not so good news. And let's share the screen. There we go. Canadian consumer debt hits $2.63 trillion as mortgages and credit card spending rises. So this was a report came out from Equifax, and it's from their latest credit trends report for the quarter three. So the report said the Canadians on average charged $2,447 per month. That's a 17.3% increase from quarter three of the year prior, 2021, and a 21.8% rise from pre-pandemic quarter three, 2019. So I think they've left 2020 out there because it was kind of obviously a weird time, and everything was very, very skewed, but that's a lot. And basically what it's saying here is the average non-mortgage debt among consumers, it's rose to its highest level since the fall of 2020. And the report is saying $21,183 is the average consumer debt. Insolvencies are on the rise, especially among young people and seniors. I can see with seniors that it can be troublesome, right? Because fixed income, everything is getting way more expensive. It can be very difficult. Strains are on high cost of living. And then car payments. So people that have taken car payments being missed are on the rise. But Canadians aren't buying as many, aren't buying or leasing as they're leasing fewer vehicles, buying and leasing. So that's it. I think a lot of people went out during COVID or wherever and bought when interest rates were, car finance rates were basically zero, and bought the FOMO'd into a new car because they wanted one. So as we saw, because everybody kind of knows this, car prices were going crazy, and it was hard to get them, right, with supply and everything else. So consumers taking credit now, there seem to be missing payments a lot quicker for some of these newly opened accounts for car loans and stuff like that. So something that's a bit troublesome that I think will, obviously going forward, I have to kind of keep our eye on that with things that are happening. So I'm still thankful that my car payment is almost paid off. I keep mentioning that, but each time I mention it, it's closer and closer. So I'm looking forward to having that done, which will be nice. That will give me some more room to put into an investment. And then fingers crossed, it doesn't, going back to credit card bills. I mean, it's funny because my bill was almost kind of that amount because I had to pay for time. I talked about new tires and insurance and all this kind of stuff you put on your credit card to get the points and then pay it off. As long as you can pay it off, it's okay to obviously put money on your credit card, but try not to carry a balance. That's where it kills you. And I think if I couldn't afford to pay off the tires at the time, I would have just not got them, right? That's kind of the thing to say, be able to say no to. It's different, but what people are putting more money on here. I saw in the article, consumers. Let me find it again. Was it this article? I gotta find it. Oh yeah, it was in this one. So people, I don't know if anybody's done it, but people were starting to put more vacations on their credit cards as well. So large ticket items like vacations, because last year, basically people started to kind of travel again. So I think people are carrying forward with these large ticket items on their credit card. But I don't know. I think it's good time to try and save some money instead of spending. Maybe try and go on vacation. I mean, that's the problem. Canadian winters, or no matter where you are in the country, Canadian winters are cold, wet, snowy, no matter what, dark. So it's kind of nice to. I know I get why people want to go away, but putting it on your credit card probably isn't the best idea these days. Unless you can obviously pay that thing off when the bill comes in. Yes, it is. From what I've been reading, I have a few friends that have been traveling too. MC travel super busy right now. Spending has moved from good services to experiences such as travel. That's right. People were cooped up for so long that I guess they feel they want to get away. You can't blame them. Sometimes it'd be nice. Sometimes when you wake up and it's minus whatever outside, snowy, wet, or rainy. Obviously, West Coast we do have a bit of snow on the ground here, which is kind of rare. But dreary winters, people do want to get away to Mexico or wherever's warm. Believe me, it'd be nice sometimes, and then forget about all the worries. But then you come home and you have your credit card bill to deal with. But it's definitely bounced back. I think travel is really starting. I was reading an article this morning with Air Canada, and they're already ramping up flights for the next summer, and so people are starting to move around and travel a lot more. So if you own Air Canada stock, it might be good in the future. I don't know. And good morning, Jason. Always good to have you. Coffee is in hand. So that's the bad news. I promise we'll get through some kind of good news anyways. But we have to get through the bad. And it is exactly what it is, right? People they probably haven't been able to, or didn't feel comfortable traveling, right? Everybody's got their reasons. So it's pent up demand for sure. I know a number of people that have gone away this year. And actually our office has a rewards trip or a conference, kind of a rewards conference trip every year. So they give away, some people can go as part of a reward idea, but then you can also book in and go on the trip. And for the last couple years, it was canceled, obviously. So it finally went this year. I didn't go, but they went. It was a good big group of people from the company, and so that's what people are doing, right? It's this pent up demand for people wanting to get out. And so you come on more. Okay, there we go. Well, experiences, nothing wrong with having good experiences away either, as long as you can afford it, and take advantage of it. That's the thing. I mean, I don't know how old you are or anything else, but if you wait too long, might not be able to travel and go to those places you want to, health reasons, that kind of thing. So sometimes it's good to take advantage of it if you can. Nothing wrong with that. And let's go next article. And we'll share this. I should really get my friend Rob back, who's in. We'll talk. Sorry, MC, I got one more question for you. The way I see it is, though, they've spent the same amount cumulatively over the last 3 years. Oh, okay, that's one way to look at it. So if you have a certain budget, right? Like if you have a budget that you normally would spend on that, whatever you're doing, right? But you've saved it and you didn't get a chance to use it. Yeah, nothing wrong with that. That's a good thing. So you can, just condensed it into, because 2020, that's the thing. 2020 was basically nothing, right? People didn't go anywhere, barely left their living rooms. But it's as long as you've saved the money, I think people did as much as it was. I think for me, I learned to save a lot during that time, right? Because you just had a change of spending habits and everything else, and I've carried them on. A lot of them, for me, it's really been, I guess if you look at a benefit of everything, it's one way to look at it. But just with starting to cook more at home, which I started to do, and not go out to restaurants because you couldn't. So start to feel better because you're eating better, and just carried it through in terms of budgeting and that kind of thing, which worked for me. But obviously some people still want to get away. I haven't really thought about traveling for a while. It's been a long time. I haven't been anywhere since. Sorry, I shouldn't say anywhere, but other than I've done local. We did a lot of local stuff, right? When I lived in Alberta, we went to the Rocky Mountains a few times. It was great because there was nobody there, and could go to Lake Louise and all the different tourist places that normally were packed with tourists in the summer, and there was nobody there. So that was great. And then some local camping and stuff like that. Did a lot of that. But I did that anyways. So it was just some opportunity to do that, but haven't traveled anywhere since, towards the end of towards the end of 2019 was the last time I was out of the country. Yeah. All right, let's get that article up. I should really bring my friend Rob on, who's a mortgage. He's in this market in Toronto, but I do talk to him on the phone almost every day, and he's been saying, yeah, it's very quiet. But usually this time of year, I think it's quiet anyways. But Toronto home sales down 49% from the same from last year, which is uh, listings are declining, rates are going up. So it's kind of, I think, really to be expected. I know from reading in the news, Toronto real estate, obviously, well, like on the West Coast here, I'm not in Vancouver, but the lower mainland is very expensive as well. And Toronto really increased. I know during the last couple of years. So we're seeing the activity come down. So down 49% from last year to 4,544 sales came in as the rates go up. And then there's a total of 8,880 new listings for the month, which is a 12% decline from the year earlier. And then down from the previous month. So it's interesting. I think sellers are holding off, right? This is what's kind of saying how sellers are holding off for fears that they won't make as much as they would, 10 or 12 months ago. If you don't have to sell, it's probably not a good time to have to sell. If you have to sell, then you don't necessarily have a choice. But I think what we'll see, I think maybe in the spring, what we'll see is, I don't know if we're going to see more coming on the market, or people finally realize that prices on real estate don't go up forever, and have to sell for what they can get. What the market will tell us. It's like any investment, right? I mean, I think a lot of people jumped on, from what I read on Twitter and stuff like that. There's a lot of people jumped on. It's, well, not the bandwagon, but it's almost like it was such a frenzy that people were buying rental properties and refinancing their houses and buying rental properties with lines of credit on there, like a home line of credit, buying a rental property with that. And of course now rates are going up, and it's going to be interesting spring, I think, for people that are in the housing market industry that's not moving. But I think from looking at it, it's almost kind of, I don't want to say it's gone back to like normal, but I think the last 2 years we'll definitely get, I think, come the new year, we'll get my buddy Rob, who's in that Toronto market, to come on and give his 2 cents on that and what he sees happening. It's always better to talk to someone on the street sometimes than reading these articles. But I know from him talking, it has slowed down, but we'll see what happens in the spring. I mean, obviously, always some people have to always do something, right? So the market won't be completely stopped, but people maybe will just sell or put the place on the market because they have to, right? Families are still growing. Even if people are having less kids, people have kids, they need to get bigger places. People pass away, people get separated, divorces, move for jobs, all that kind of stuff. So we'll have to see what happens in the future for that. And I've got one. Well, no, I got one more bad article, then an okay article we'll go through. But this is kind of, I think, a little bit telling what's kind of happening coming forward with the, as you can see, with we talk about housing, we talk about building. Let's pull this one up. So Canfor, obviously lumber, they are reducing their production due to weak market conditions. So I think if you remember going back looking during. Let's grab your question first here, MC. This is perfect. So the in the GTA, the top around February, it was the same for the lower mainland here, MC. Condo is down around 15 to 20% from the top. Not surprising, an increase in rates have affected long duration assets. Exactly, we're seeing it happen. I mean, I think we saw it. I think we saw it in the stock market before the housing coming down this year, and housing, obviously, it can be it was treated a lot like necessarily like an investment for people. Obviously, that's how they treat it. Maybe that's not always the best way to do it, instead of considering it as shelter and sticking in a place. Because there's lots of people that bought and sold it because the prices are going up literally overnight, that you would sell it and make money. I mean, that's why they're doing a lot of new kind of policies in terms of reselling within a certain period of time, taxes, all that kind of stuff. So yeah, they're down. The prices are down here too. If you do watch it, like I know my mom's neighbor's place was for sale, and it was listed eventually high, and then it slowly they finally sold, but everything always eventually sells, but this prices need to be interesting. But that's the thing. I mean, it's the rates but we're seeing that, I think we see a bit of lag in the housing market. It's just a slower moving, it's a different asset to have to be able to sell. It takes longer, and it's but I think with the qualifying of it, it's harder to qualify, right? Because the rates are higher, so it's harder to qualify for a mortgage, and that will reflect in prices. I think it just takes time before that's slower to come through the market than say a stock that can come down quite quickly, right? So interesting. We'll see. I don't know how it will continue. I am not going to be predicting that, but I think it can only kind of say, as if we see, obviously we're seeing rates come down up, we'll probably see rates come up, floating rate, prime rate come up tomorrow, which is going to be, if variable rates more expensive, right? So the prices of housings have to come down because it is harder to qualify. Because borrowing is more expensive. It just comes down to that. And the wages haven't caught up with that yet, right? So that's only one thing can happen. And rates have to come down, or prices have to come down to qualify. So we'll see what happens. I think the spring will be an interesting time in the market if you're following. I think for everything though too. I think the new year is going to be interesting for stock market, housing market, everything. Hopefully we see the turnaround. But the rate of kind of looking, and this kind of brings it up, that article I was going to share is kind of like, we're coming and seeing more and more, you follow everything and read into everything, and we're looking kind of at recession, right? It's just kind of hasn't been formally, announced as a recession. So Canfor is obviously a lumber lumber company, wood. They're temporarily reducing Canadian production due to weak market conditions. So I was kind of talking before MC's comment came up. Always appreciate your comment. I didn't want to miss that. But it's I remember during like 2020, a lot of people did. I mean, you can break it down. There was a lot of building happening because everybody was wanting to buy houses, but there was also a lot of people doing different renovations and stuff like that. And I know from talking to people who were trying to do things in their house, like, whether it was an addition or a renovation of some kind, or like a deck or a new fence or that kind of stuff, lumber got really, really expensive at the time. So this is basically, now they're kind of coming back and saying that they're temporarily reducing its Canadian production due to what is weak market conditions. So obviously they wouldn't, we're not just talking about Canada here, but they're moving their production down. It's very short article, but they're going to be basically slowing production down on December 19th in a range from 1 to 4 weeks across Canada for its operations. So they'll adjust they're going to be adjusting their rates to align with the market conditions. So but it does anticipate that the majority of its BC facilities will operate below full capacity in the new year as well. So very short article. This list just did come out, so we're kind of, I think the writing's a bit on the wall here. What's happening? Things are slowing down. So and it's if you look at the prices of lumber, it's like during 2020 and stuff, it went like shot way up, and then now it's like literally like it's like a way up and down very fast. And that's kind of what's happening. So they this is kind of, I think, goes to show, like we'll start to see inflation coming down, like the rate of inflation coming down, because things like this are going back to price what they were, where and that's kind of comes with everything. If stuff starts to slow down, then that's the inflation, the rate of supply and demand, right? So it's we'll see. And then so if a friend that works in a major appliance manufacturer said that sales are fairly weak also. Shift from buying things to buying experiences, and that's what's happening. So I think people aren't buying, they're saying they're not buying the new washer, if you're not but money is going other places too, right? So they're maybe buying experiences, right? They're buying travel, as we're seeing from the report from Equifax, more travel, and they're not spending that money on stuff, but they're also maybe spending more money on other things where the budget obviously doesn't, they're not if the food bill and the heat bill and the gas bill, although gas has come down a little bit in price, but if everything is still expensive, you're spending less money on kind of major stuff. 2020 to 2022, everyone that had a house probably did something in their house. It's true. Um, and there probably is actually very, very few, because a lot of people that did it, I think, did it during the time. Because I know a lot of people. Well, a lot of people moved for the market too, because a lot of people were 2020 were starting to work from home, right? And then, of course, where you had I had friends that had a one-bedroom condo that was for two people was perfect, because they would both go to work and then come home at night 5 o'clock, and it was fine for space wise. All of a sudden that switched, and as soon as two people have to live in a small, if you're in a small condo, you don't have to, you don't have a ton of space, right? So you have to buy up the house, and that's what drove up the prices too as well. And then people would renovate. Like I know people, or heard people that also renovated to build a home office or that kind of thing. I've even seen. I remember looking at like listings and stuff online of houses and stuff, and like people were building like small offices and stuff, like modular little houses in their backyard, like a little office in the back. So, and like we said, like buying stuff to make, expand the deck, put a pool in, whatever, right? Um, and that's the thing. Jobs aren't. They're still. Yeah. That's what's. It hasn't. It's interesting times, MC. It really is. It's Yeah, what pans out, because it's almost like, um we see the because we see the this is per comment. So while the goods and services are coming down in many areas, people are being paid more, and the only way to bring this down is by increasing unemployment. It's true, and we still see it, like jobs are up, right? So it's like, where's this going to balance out, and what's going to happen? I don't know. Just interesting times, because obviously they can only raise rates for so long before, and we're kind of at that point where, I mean, obviously we're seeing it with people being able to afford mortgages and that kind of stuff. But I don't know. What we'll maybe have some more clarity kind of tomorrow coming forward with what's little bit's going to happen. But and by that measure, a pivot is not coming. So you think not coming for a while? Yeah. And that's what we'll see. I think we'll see we'll see the slowdown. We'll see the slowdown, but it's kind of like the slow. It's kind of like the slowdown, or I mean, the pivot is reducing, right? But I think they're going to be very cautious in reducing prematurely, right? So the pivot is almost maybe the market will read the pivot as a flat, a stop, or a slower acceleration. We'll see tomorrow and next week, right? What is going to happen? I mean, some people, we talked yesterday, 50 basis points, 25 basis points. If people see 25, they see it as a slowdown. If they see 50, it's kind of like that could go both ways. Like it's a smaller increase, but it's showing that it might continue. It's hard. And then the Fed the Fed the following week will be also really telling with what they're actually thinking, what's going to happen. So we'll see. Mark, like if you look at bonds and that, if you read about it, and I'm not an expert by any means, but they're pricing in quite a recession. Pivot indicates reduction, but I think we will continue raising with lower increments. Yeah, I think so too. If they go to 20, if they do 25, let's just talk about Canada. If they do 25 tomorrow, they have room to go more. And continue to do 25 increases just to kind of go forward. If they do 50, they maybe don't have as much room to carry that forward. I don't know. We'll see. We'll see. The biggest thing with tomorrow too, it's always interesting when you read into I mean, it's one thing to get the rate, right? What they've done, up or down, whatever, how much. But it's always interesting to read into their comments, and there's a lot of kind of like hidden kind of hidden kind of message in a lot of the dialogue that they put out with the report. So that'll be interesting to check in tomorrow. We'll know tomorrow. And I have one more article, and it's kind of good. It's kind of good news. It's not bad economy news. So we'll count it as good news. And we've talked about. I've got. Let's do this article first. It's got some more in depth, but then we'll go over to their website. So for those that have any kind of digital currency, cryptocurrency, Ledger is releasing a new wallet coming out. It's available for pre-order. It looks like a little Kindle. So it's got a touch screen. It's got the same kind of, from reading, it's got the same kind of screen as you'd have in a Kindle. So it's like that electronic e-paper kind of thing. And they're basically releasing it. I think it's supposed to come out in March. It was designed by the co-creator of the iPhone, which is kind of interesting. So it's just a bigger device, and it basically lets they're coming out. It's kind of like, it looks like a kind of a Kindle, but it's a wallet for your digital currency. Now I'll share what it actually looks like, because it'll make more sense than that as I'm trying to explain it. It's called the Ledger Stacks, and let me just share it. It looks kind of neat. I use for mine. I do have a Ledger. It's the Ledger Nano, so it's a little almost looks like a USB key. And this one is like a little ebook almost. So it's probably smaller than a mobile phone, but it has the screen on top and a little screen on the side here that you can hold your crypto. So it has it all. I won't play this because there's copyright music in there maybe, but you can display NFTs on it, pictures, and it has all the security functions. So they've kind of released this, I think, just as obviously a new device. So it looks like about the same size as like one of the old Apple, an Apple iPhone. So it's trying to get, I think, new people into obviously securing their digital currencies as opposed to keeping it on exchanges. Because if we actually read, there's been a big outflow with all the stuff that's happened with FTX, all that scam with that. A lot of people have been, which is always recommended, is taking your assets off of exchange and holding them in a wallet. So this is another way to kind of do that. The only downside of this is the price of it. I can pull in, the price is Canadian $391. So it's pretty pricey. It's not cheap. The regular Ledger I have the one here, like the little ones are maybe only about $100 depending what ones you buy. So this is quite a bit more expensive, but I'm sure people will buy it to hold their crypto. But if I guess my suggestion to people in MC, I did see your prior comment, but it does this. I know you don't invest in it, but cold storage is the way to go. If you have we don't talk about crypto a lot on the channel, other than a little bit of Shakepay, or I do have a couple of the ETFs of some of those ones in my TFSA. But that's my biggest suggestion if someone wants to, because you can get it on Wealthsimple. I mean, and you can take it off of Wealthsimple. So that's always, I think, the key is to have your own keys, and to take anytime if anybody's investing in it or speculating in it, or however you want to look at it, take it off the exchange, hold it in your own cold wallet. Then you're protected from any kind of insolvencies, that kind of stuff. It obviously doesn't protect the asset from going down in price, but at least it's protected in terms of you retain ownership of it, and it's there, and what you bought is with you. So always kind of need to see new devices. It looks kind of cool. I don't think I'll be buying one, but does look kind of interesting, a bit more user friendly, because some of the other ones, they have a very small screen, and it's just a bit. The learning curve is more, I think, than maybe this new device, which are trying to maybe bring more people into investing. Well, not necessarily investing, but making sure that they're taking ownership of their stuff. So that's good. I know this is back to our prior one, talking about Canfor. It's always good. I always appreciate this, MC. I know people see layoffs, recession as a bad thing, and I suppose in the lens of society it is, but it's really part of a healthy economic cycle, right? There you go. No other comment need to be said, but it actually is. It's what happens in the world and in the countries, and it's just the business cycle, and it will continue, right? We will see recession. but we will also come out of it around, and typically we come out of it stronger usually, and things always move forward for the most part. And but it's just never, obviously, yeah, it's you never want to be, laid off. You're talking about layoffs. You never want to be laid off your job. It can be devastating for people, or it can be very stressful, and it can be a very stressful time. Especially I think now, with, you've bought a new house, and it you're paying a higher mortgage, and all of a sudden you've lost your job. It can be very, very, very stressful. I remember back from my dad, because my dad was laid off when it would have been the early 90s. So 1990, I think, was the kind of one of the last big ones in Canada. And we had just moved. I was only like 11 or 12 at the time. So I don't know, obviously, all the details, but then looking back, and you kind of know you figure out what happened. It was kind of tough, right? Our family had just moved to a new house because they built a new house. And the house was built in '86. So I don't remember the price. The price, obviously, was, looking back now, was probably a steal, but back then, obviously, interest rates were higher and everything else. So kind of relative. Everything was fine. The house got built, moved into the new house, everything else. But then, like 2 years later, my dad got laid off. He was I think he was 50, if I'm not mistaken, or just after he had turned 50, and the company had to restructure, and went from working somewhere where he had, this is kind of shows, he had a company car, they paid for all his gas, he commuted every day, didn't cost a thing, and all of a sudden has no job, right? And it's almost coming from my mom. That generation didn't, the wife didn't work as much. She had a job, she had a part-time job, but she mostly looked after his kids, right, as we were growing up. So she wasn't in a professional, type of position. It was part-time. She worked the stores and did that kind of thing. So it was tough. Yeah, it was tough. He eventually ultimately got another job that worked out. And it's funny how it's always kind of, we see it as somebody's a bad thing, but the way it turned out in the long run, it actually worked out. It actually worked out better. He worked for a company. He was in sales. He worked for a company that he could, was based out of the States. So he worked at the time. He worked remotely. So he ended up having a home office set up. So it worked out really good for him over the years, because as he got closer to retirement, he worked from home. So he had that flexibility, and with that was able to, obviously, he worked past 65. I think he worked till he was around 70, if I'm not mistaken, 70 or 71. I can't remember. But it worked out in high, at the time it was terrible, but going forward, it actually worked out okay, because he didn't have to commute anymore. He did travel around for sales and that kind of stuff, but it worked out. And there we go. Financial literacy is important. Recessions will come, but being aware and financially literate will put you in a decent position. That's exactly it, right? Have your emergency fund just in case. Hopefully you don't have to ever use it, or not use it that often, but it's definitely just being, and not, this is, again, going back to vacations and everything else. If you're putting something on your card that you can't pay it off, you should probably not be. I don't know. I just think right now you probably shouldn't be doing it, unless it's a real reason to do it. And it is. People don't really realize how crucial salary income is. It's true. You have to. If you're living paycheck, it's very tough. It's tough out there, But I don't think a lot of people are as financially, financially literate as they probably should be. But hopefully this channel helps for some people to learn a few things. That's my kind of hope. I know I am MC. So hopefully everybody else can learn a little bit too. I think for the most people that are watching, we're we're kind of pretty savvy, over and above. I mean, we're all on different levels, but more so than someone who has no concept of invest, of investing for your future and savings for sure. So it's it's it should be we could get into it again, but it should be taught better in school. It was never really taught to me. You learn from your parents. So if your parents are bad, you probably pick that up, right? Which is unfortunate. This was a good stream today, everybody. Thanks for watching. I always look at the corner of the clock, and we're already almost at 1:45. So we got on lots of great comments today. I really, really appreciate everybody that's tuned in for the morning. It's always appreciated. So we're kind of come to the end. We're kind of go about 45 minutes. We're really close. That's great. If anybody has any last minute comments, obviously MC, always great to have you on board. We should have you on the camera maybe one time if you want, if there's something in particular you want to talk about. But not everybody wants to get in front of YouTube on camera, but that's okay too. So thanks to all the regulars, everybody coming in. Jason was here. We had Brian. If you're still watching, thanks, Rod, as well. Abigail and Stan and Nadia. It's always appreciated when everybody pops in just to say hi. Even if you can't make the whole stream, it's just nice to have everybody come say hi. So going forward, let me know if there's any last minute questions, but if not, that's okay. Going forward on portfolio, we've got a big day tomorrow, right? Bank of Canada meeting tomorrow. And then we'll be able to talk about that tomorrow on the live stream. See what happens, and then we'll also I promise I'll get that update filmed at some point once my emails stop coming in and working. But I'm fortunate that I'm busy, so I'm happy about that. Not too bad. If I'm not busy, I'm not making money to invest. So it's double. It works both ways, so it's always good. But other than that, that's all, everybody, for Tuesday. If you haven't hit that like button yet and you're watching, it's always appreciated. Hit like. If you have someone that you think might enjoy either the live streams or some of the videos on the channel, pass it on to a friend or maybe someone in your family that would maybe find some value with the live streams or some of the videos. It's always appreciated. The more the merrier. And if you are if you pass that on, it's always really appreciated. We're doing pretty good on the channel. The channel the subscribers go with the market. So the market we can tell the market's down because the subscriber increases that's how we're judging the I think we're at the bottom of the market just based on subscriber count, because not a lot of new people joining. So I think people are apprehensive about investing right now, but I think that will turn around. But once it does, it would be it's great to have everybody here, and we'll have some new faces on there. And I always like to say people always keep asking me if we're almost. I'm looking forward to being making the extra little bit of monetization, because the little side hustle is going to give me more to put into my TFSA. Not there yet, though. Getting there slowly but surely. The live streams are helping, so I do appreciate it that everybody that's watching. And then we'll leave it at this. Jason, thanks. Great stream. It was great. It was a lot of fun. It went fast today. Too fast, I guess. But I guess that's a good thing. So we'll finish off with a bit of fireplace and get into our day. I'm going to get to work. Hopefully everybody else has a good rest of their Tuesday. And we will see you in tomorrow's live stream. I'll post it on the channel so you can get notified that it will be live, and we'll hopefully see you all tomorrow. Thanks everybody for watching.